So, stocks or real estate, right? Which one has better returns? Which one is safer investment? Which one suits me better? Does that sound familiar? Let's figure it out. Now, I'm going to break it down into three important criteria: which brings higher returns, which one is safer investment in times of uncertainty, and what suits you better in your particular case. But before we get into that, let me introduce myself. My name is Stan. I'm a real estate professional here in the city of Fort Lauderdale. It's South Florida. And I've dealt with both myself. I bought real estate, I invested in the market, I had my own wins and losses. And you can imagine I've done countless hours and hours of research, analyzing the data, evaluating the market, because I wanted to make well-informed decision. With that being said, stay tuned until the end for the bonus tip, because in my humble opinion, that's the most crucial bit of information out there. Number one, returns. Real estate is attractive as an investment not only because it appreciates in value, but because there's a potential for additional income as rentals. But are stocks better as far as return on investment? Let's dig in. I'll use my own example. I recently acquired a property and it required a hefty down payment because I didn't want to pay PMI insurance, so it had to be over 20%. And you can imagine the properties north of $500,000, it's going upwards of 100,000. And as of now, it values about $60,000 to $70,000 more than what I paid for it. Also, back in March of 2020, when the market was dropping, I acquired a stock at about $20 per share because it went down from 100 and then it jumped back to 140. So you can see that both can offer great returns. The difference would be barrier to entry. With real estate, you might be required to have hefty down payment, where with stocks, you can start investing literally with $100. Number two, stability. So, at times of uncertainty, which investment holds up better, real estate or stocks? Something to know about real estate market: it's slow to react to market change and it's local in nature, which means that if market is crashing in New York, it might be on a rise in Florida. On the other hand, stocks react to market change with the speed of light, which might have potential for higher returns within shorter period of time, but also comes with the risk of market falling face down. Number three, which investment aligns best with your financial goals and your risk tolerances? Let's dig in. If you're in your early 20s, stocks could be a great option because you have good 4 decades ahead of you before your retirement. Your risk tolerance is high, barrier to entry is low, and you can weather the storms, to be honest. And the good thing is when you start saving up something in your retirement account, you can use it as a down payment for your first home without penalty. By the way, this is not a financial advice, and you definitely want to discuss this with professionals. Real estate is a great investment, first of all, if you can get it. Second of all, if you can park money for a substantial amount of time, because it's not a liquid investment, right? It's going to be there for some time. And also, if you're looking for an income, rentals. And the best advice anyone can give you, you want to have both. Real estate and stocks. You want to diversify portfolio. You don't never want to keep all the eggs in the same basket, right? And a bonus pro tip: just like you wouldn't do your own surgery, always talk to a professional before spending your hard-earned money on stocks or real estate or anything. I really hope this was helpful, and I'm committed to answering more real estate related questions, so feel free to check out the channel. Thanks for watching.